Hi, everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. We'll take a look, see what's going on, making news, all that good stuff. It's April 29th, 2024. Pretty soon we'll be into May. Yeah, that's kind of how it works, right? April, May. I just think in terms of the snow up in the mountains is melting, ski season is about done. I was up yesterday and spring skiing for my skiers. You know this, it'll get warm, melts the snow a little bit, gets cold overnight, freezes, and we start off on an ice rink. And then it turns into slush. But we're up there to try to get that 30 minutes of when it's good. But anyway, I hope all of you are well. I want you to know that everything that I do here is for educational purposes only. It is not intended as investment advice. So let's move in the markets. We got the Fed announcement due May 1st. We're not expecting anything unexpected. The Fed's going to hold rates. So it'll be all about their comments. How does Chairman Powell feel about the fact that, so far this year, inflation has been very sticky. In fact, it's gone up a bit. Does he come off sounding more hawkish? If so, that could be a problem for the market. All three indexes were up last week. The market feels different than it did 2 weeks ago, 3 weeks ago. Certainly a little more lenient, more resilient, and we'll see if we can keep that streak going. Market's up so far today. Tesla's rolling out self-driving cars in China. So they got approved in China. Stock jumped. So they've had a couple of big moves upward here in the last week with their earnings and then this announcement. 10-year Treasury, pretty steady at 4.645. We want that to be under 4.7. Then we want to see it below 4.5. If we ever get it under 4, and we will at some point, that'd be a big boost for the market. And oil prices just kind of hanging around, 82.50-ish. So what to watch this week? Nothing today. Tomorrow we've got unemployment cost index, consumer confidence number coming out. We have the Chicago Business Barometer PMI, that's Purchasing Managers Index. They do some surveys. Wednesday's the big day, the really big day. We have the ADP unemployment number, and we've got the jobs opening number. Both of those are potential market movers. And then we've got the Fed and the subsequent press conference. So big deal. Thursday, initial jobless claims will come out. And then Friday, we've got unemployment coming out. So, this is a big news week starting really on Wednesday, Thursday, Friday. Data that'll get released that could move this market one direction or the other. Last week's heat map, look at NVIDIA, roaring back, up 7.37%. Happy to have NVIDIA trades on. I started doing covered calls on Apple at around 165. It's now made its move higher. Broadcom kind of moves along with NVIDIA. There's Alphabet. Now look at Meta was down. And why was that? Well, they announced they're going to start spending more money on AI, which could hit the bottom line, and the market did not like that so much. So that was last week. Now look at Tesla, up huge. 1 year heat map. So the big winners, Lilly up 88%. They used to be over 100%. Meta 81%. Alphabet 56%, Amazon 63%, JP Morgan 40%, Nvidia 213, Microsoft 31, Broadcom 114, AMD 79. There's been a lot of money to be made. Market breadth last week. I always like to look at new highs versus new lows. So on the NYSE, pretty good. 154 highs, 93 new lows. Disaster on the NASDAQ is, some of those tech stocks are pulling back. It was 167 to 417. So if we're keeping score, how we're doing year to date, the Dow pretty flat, up 1.5%. S&P, not bad, about 7%. NASDAQ, 6.1%. Bonds are down 3.3%. And so some of the biggest winners, ResMed, Supermicro Computer, both of those up about 20%. Teradyne, Hasbro, there's NVIDIA, Microchip Technologies, Monolithic Power, Tesla, Tyler, and Westinghouse. Percentage of stocks trading above their 50-day moving average, it is now below 50%. So it made this big dip, and now it's starting to come back some. So we're at 44.73%, not real impressive. Percentage sector that's trading above its 50-day, so energy and utilities, way above their 50-day moving averages. Technology, only 22%. Discretionary, 31%. Communication, all these have pulled back. Healthcare, 17%. So, the only ones above 50% are staples, utilities, and energy, and a flight for safety when the market got spooked. Retail investor optimism kind of hit a wall. Look at that. They're running high and then boom, now it's negative. So they look at, bullish versus bearish. Now they're slightly more bearish. Money managers are reducing their exposure to equities. Generally, that is a buy signal. If you look, right, fell way down here, market went up. So they're usually late to the party. Beats versus misses, 63% beats, 10% misses. This current season, consumer sentiment has been falling off a bit, nothing alarming. And the latest, greatest Fed probabilities. So there's a 97.26% chance Fed does nothing on May the 1st. There's an 88.1% chance that they hold in June, a 67.5% chance they hold in July, and we're expecting a rate cut in September. So that's where we're at. Always subject to change. So earnings this week, busy day on Tuesday, 3M, McDonald's, Coca-Cola, AMD, Amazon. Those are all biggies. So we'll be watching the market that day for sure. And I'm looking here to see if there's any other real market makers. Probably not. Those are your big ones. Let's take a look at the chart. See what's going on. What's going on? All right, S&P 500. What do we look like? Trying to crawl back above that 50-day, right? So we fell below it. We had a couple of 3 rough weeks, and we've been trying to recover. A lot of times that 50-day can act as a level of either support in a bullish market or resistance in a bearish market. If we can break back up above that, I'd be a lot more confident. I expect that the market's going to go higher the second half of the year with probably a lot of volatility over the summertime. we get through the summer, market's going higher. We're heading into an election. We're getting closer to a rate cut. Yeah. So, and here are the cues, kind of at that same inflection point, right at their 50-day moving average. How about the Russell 2000? Well, improving, but again, below its 50-day moving average. So all the three indexes that we follow, still below, but trending in the right direction. Big earnings this week, and big data releases this week. So if there was ever a time to keep your eye on the financial networks, this would be the time to do it. All right, guys, have a blessed week. I'll see you back same time next week. Bye for now.